Landscapes, organized by the Indian Venture and Alternate Capital Association, supported by Amazon Web Services, Cyril Amarchand Mangaldas, EY, and Goodwin. Startups today have potentially shown that they would like to re-domicile in India because of various reasons, such as drawn by a booming market, a favorable regulatory environment, and improved access to domestic capital. The maturing Indian stock market, combined with initiatives like Startup India, has made the country an increasingly attractive base for countries domiciled abroad. Today, we bring together industry leaders, regulators, and founders to discuss the strategic implications of re-domiciling to India and how domestic capital and favorable regulations are shaping the future of the investment landscape. May I invite on stage Mr. Rajat Tandon, President of IVCA, to give the opening address.
Thank you, Shilpa. Good evening and welcome, everyone. Indeed, it's a pleasure to be here in Bangalore. Lovely weather, unlike, Delhi and maybe, I don't know about Bombay. But very strange thing, just when I was meeting Dr. Kaur, and she mentioned that, she was meeting Ravi Gururaj and Prashant earlier in the day. And, it just got me memories back. I used to work for 10,000 startups, right, at NASSCOM. And at 10,000 startups, we used to do something which is called an InnoTrek, which was taking our top startups in this country to the valley to get them funded. And here I am now talking about Bharat Vapsi. So I said, this is a 180-degree change, and I'm glad I am talking on this topic right now, because most of my members, about 380 plus members at the association, are very much based here in the country, and only purpose is to support the ecosystem in the country. So with that, just to let you know, the whole idea of the Bharat Vapsi is very significant, and I think very timely at this point of time, because really the investment landscape in the country is reshaping India. And really, not only the startups, but also the scale-ups in this country are building up and helping this ecosystem. So again, Bharat Vapsi is about the return of the Indian entrepreneurship to their homelands. And this looks like the emerging trend. Now, all of you would have heard the budget, recent budget. One big announcement was on the angel tax. And certainly that's really happy. Something which was there, not necessary, clarity given, removed by the government. What it enables, certainly, this is a message to our folks who are still outside saying, look, angel tax, one is gone. So internationally, please come here, angel tax gone, you can get your money in this country. Second was about the long-term capital gain tax, right? So at least we got the parity. Now there is a choice with the Indian investor. What it means really for us in this industry is it actually opens the pools of capital for us. So an investor, a domestic investor, which is in your LP, who has the option, or rather did not have the option of investing with you because the tax structure was nearly twice, listed versus unlisted. He always was putting his money in the listed space. So luckily now, with the parity, at least there's a choice for him that I can invest with you. So pools of capital in this country are also opening up. So Bharat Vapsi is just not symbolic, but really it's the belief, it's a deep belief in the Indian ecosystem, in the Indian economy, right? And really it's all of it coming together, and the rate at which India is emerging is probably growing twice as any other country in the world. So all positive signs, and India today has positioned itself as a global startup hub, and hopefully we're able to make it as a global fund management hub also, as we're working towards activities in the country. Again, some stats and some numbers. Way back in 2023, nearly 50% of our unicorns were domiciled outside. So hopefully they're listening to us, and more of them are coming up here in India. And nearly about 8,000 startups were registered. Their companies got themselves registered in Singapore. And certainly, if they're there listening to us, We want more and more of them to come back to India. Again, what it means is that actually our government is losing out billions of dollars of revenue, tax revenues. Some rough estimates, $10 billion, that's the number which we were kind of working on. So with these trends, I think, reverse flipping as it is heard, is transformational. And the success which you've seen, some of the people like Flipkart, Grow, and PhonePe, setting up their offices here in the country. Even the economic survey of 2022-23 actually recognized reverse flipping. That's very critical. It's important. And the government said, yes, we are all out to support it. And hopefully we're going to work extensively on that. Again, another important factor which is also contributing to the reverse flipping is about the changing attitude of the founder. Now, the founder actually has started to acknowledge the fact that there is value creation that can be done in this country as well. There is an increased investment available in this country. Also, there's a brand which can be built here in the country, right? So, and finally, I think, it's the strength of you all who's investing and trusting in this startup. And finally, I think everybody knows the exit market, whether it's an IPO with somebody else is fantastic in this country at this point. So why not be in the best place in the world? So, so again, the shift is more just returning home. It's about building trust and confidence in this ecosystem in the country. I won't talk much about the IVCA. Sid over here, he's going to talk about the changes and how, that's the gift city in Ahmedabad. What changes they are making to enable more of startups to be, hopefully the word flipping for startups there as well. Again, this is not going to be easy. Challenges are definitely going to be there. And here's probably a solution which says, look, the industry body like an IVCA with its members, we can set up to collaborate between the government, between the founders and the investors, and invest some and address some of these issues which will be very much needed at this point. Even the government, the DPIIT is also looking at how they can have a chat on this particular subject, and they have been very helpful and supportive on these initiatives. Again, just the flow of the day, we have Sid's note on reverse flipping, IFSC, and critical regulatory outcomes. Sid is our executive committee chairman, chairperson. He's part of, executive committee. And also he's the co-chair of the regulatory council. So a lot of burden is on Sid, and Sid's always there to help us out. Again, we thank EY, Cyril Amarchand, and Mangaldas, and Goodwin, who will shed their light on the tax and the regulatory legal landscape. Dr. Kaur, thank you very much for your presence. We'll have a session with Prashant and really look at how the intersection of policy and the investments can take place in the country. A panel which is with Manish, Smita, Lavanya, and Anjali. Did I see Anjali? I haven't seen Anjali yet, so hopefully she's there. Okay, great. So that's going to be, ensuring how the domestic pools of capital can actually play an important role in this success story. Again, we are all looking forward to having a session with Vishal from PhonePe, and Manish, hopefully you're going to take that session for us. Thank you so much. As a concluding remark, I just want to make sure that we all read this well, that Bharat Vapsi is very critical to our success, to India's success, and India's position as a startup and a fund management capital as #1 in the world. That's what we need to take forward. Let's all, even network and speak to each other and have fun during the day. Thank you very much, and welcome again.
Thanks, Rajat. May I call on stage now Mr. Siddharth Pai. Siddharth, of course, is the founding partner, CFO, and ESG Officer 314 Capital, and co-chair IVCA Regulatory Affairs Council and IVCA Executive Committee member. He will be giving us the keynote address.
Very good evening, everyone. It's a pleasure to welcome you to the startup state and to the startup capital of India, which is our dear proud Bengaluru for that matter. I dare say Bangalore has actually been one of the largest contributors to the entire Bharat Vapsi movement. A number of our entrepreneurs have chosen to actually domicile overseas, and I'm fairly certain a large number of them, if not all, do actually want to end up coming back as well. And even the ones who come back from Singapore or US, they end up actually choosing Bangalore as a place they want to come back to. Because after all, Bangalore is where all the assets are, Mumbai is where all the equity is, and Delhi is where all the liability remains for that, huh? The Delhi people often laugh the loudest for that joke. So I'll just start off with a brief overview of the Indian startup ecosystem also as of now. We're actually the third largest startup ecosystem in the entire world. And we've actually done this in a remarkably short span of only 12 years itself. We only lag behind China and the US, both of which have become very large giants. But our rate of growth, for that matter, is actually far, far larger than them itself. Even though some of these stats, and one of the biggest risks that we face as an ecosystem is most of our stats and our documents get dated very, very quickly. We've actually crossed close to 118,000 startups that have been recognized and registered with the DPIIT as well. They've actually created more than 1 million jobs for that matter, a combined value of over $500 billion as well. And the total number of funded startups in the country have actually gone up to about 15 to 20,000 startups on that entire piece. And we've actually seen the rise of homegrown VCs to end up actually coming in, and we had seen that entire ecosystem start the virtuous cycle that all of us see. And 21 listed startups, and that's 21 listed startups as of 2023. Just in the pipeline from Bangalore itself, we're actually seeing close to 10 to 12 startups who are in the process of actually filing their documents, getting their bankers on board, and to end up actually getting that entire start as well. Delhi beat us to it, but once Bangalore ends up coming, we'll end up changing the game, as we normally do for that. And even in terms of the global startup ecosystem comparison as well, we still have a total funding of about $141 billion. We pale behind the US, which is $2.5 trillion, as well as China, which is about $816 billion for that matter. But in terms of number of startups, number of unicorns, and the rest, our rate of pace is actually far larger. But one thing that's often been absent in the Indian startup ecosystem is actually the participation of rupee capital. We have been wholly reliant on foreign capital actually coming in. In fact, 85% of the money coming towards Indian startups actually comes from overseas. It doesn't actually come from Indian sources. And it's not because Indian investors lack a belief in the Indian startup ecosystem. It's because we had a series of regulations that were created to actually actively suppress rupee capital. And in fact, one of the initiatives that IVCA has taken on board, which also forms part of the entire Bharat Vapsi campaign, is to ensure that this suppression of rupee capital actually goes away. And we do actually create parity between Indian investors and foreign investors also. And I'll also speak a little more about that as we go through this entire system as well. But the Indian startup ecosystem does have a very, very dirty secret. It's a fairly open secret, but it is a very dirty one. That is the fact that the majority of our unicorns are actually domiciled overseas. The largest startup exit in the country of Flipkart wasn't of an Indian company. It was of a Singapore company. They were actually domiciled there. PhonePe also, it became the largest fintech unicorn, was domiciled in Singapore until Samir actually took the brave call of paying $1 billion in tax and actually moving back to the country as well for a whole variety of reasons. And now we've seen the likes of Zepto, the likes of Grow, and various others actually look at this entire part trying to find a more tax-effective way to end up actually coming back. And there were reasons why these startups decided to actually move overseas. And the last 10 years, the Indian government, actually more than that, the Indian people and Indian investors and entrepreneurs have actually done a tremendous job to ease those kind of restrictions and to create a level playing field to allow our entrepreneurial talent to end up actually remaining overseas. Because while a majority of India's unicorns aren't Indian, and a number of them are headquarters overseas, such as the ones you end up actually seeing on the slide. Are the slides visible? Yeah, I think, no. Missed out quite a bit of that then. So we just wait for that, for the slides to end up actually coming back up. It's all that Bangalore has technical difficulties when it comes to tech, but surprises every day. So I think, yeah, so just as I'm continuing for that matter, even though the majority of our unicorns aren't actually Indian, a majority of the global unicorn founders are actually of Indian or Indian origin. There was actually a study done by a Stanford professor, which actually mapped out all the about 1,000-odd unicorn founders in the US over the span of about 15 years. And outside of the US-born founders who were there, India, there were 90 founders who were actually not born in the US, who ended up actually coming from India. That was nearly twice what we ended up actually seeing from Israel, for that matter, was at 52, and China was all the way down at 27. In fact, the Chinese party still ends up actually the Communist Party of China still looks at the fact that a majority of the tech CEOs in the valley are actually of Indian or Indian origin, for that matter, and they're yet to end up figuring out a way to end up actually reconciling with that fact. It just shows that there's nothing that can actually suppress Indian ingenuity when there are no artificial restrictions that come. And indeed, externalization is actually an existential threat to Startup India. We are Startup India, not Subsidiary India. But in fact, what we've seen is a number of our unicorns only have subsidiaries and a presence here, despite the majority of their management team, the majority of their business, and the majority of their customers also ends up actually remaining within India itself. In fact, even the economic survey of 2023 did actually point out the fact of the hazards of flipping and actually recommended a framework or a series of initiatives to end up actually ensuring that these companies do come back. And all of these matters, I'm proud to say, was something that IVCA has actually been championing for close to 8 to 10 years over the past decade. And we've actually seen tremendous amount of progress on this, not as much as what we would actually like to see, but that fight ends up actually continuing on that. And there are 4 broad reasons for why our startups have actually chosen to domicile overseas. Of course, the speakers will end up speaking about it and how that's actually changed for that matter. The first and foremost was actually the lack of rupee capital. As I said, 85% of the capital actually came from overseas. And we didn't actually have, most of our Indian fund managers also had structures in Mauritius, in Singapore, in Cayman, in the US, et cetera, as opposed to coming in. Unlisted Indian investors into unlisted assets paid a tax rate that was 2.4 times the rate actually paid by investment into listed companies like Infosys, Wipro, TCS, et cetera. Despite the fact that those listed stocks are liquid, they were easy to end up actually getting in and getting out. And a large amount of the money going into Indian startups actually went into new asset creation. It would go into hiring, it would go into jobs, whereas in the stock market, the money actually goes in the pocket of one investor to another. So the fact that the Indian government chose to actually suppress investments into startups actually baffled all of us for the longest time. And it's only recently in this budget that we're actually seeing a win end up coming there. And the second reason why we've actually seen these sort of startups go is because of the Foreign Exchange Management Act of 1999. We've actually seen FEMA being one of the fundamental barriers, especially to the growth of a strong SaaS ecosystem in the country. Every third AI or SaaS founder in the Valley is actually Indian or Indian origin. The reason why they can't set up over here is because if you had to do a cross-border billing of $10, you need to submit your invoices in triplicate. And imagine doing that for 100 customers and 1,000 customers. You would have an accounts team that's actually 5 times larger than what your tech team actually ends up being. And that's one of the reasons why these startups have actually chosen to go overseas for the ease of operational efficiency. The next is we have a tax framework and an exit framework that is not yet conducive to what a startup and a highly vibrant startup ecosystem ends up actually demanding. We've seen that tax-free M&A is an LCLT process that takes about 18 to 24 months to end up actually closing. We've seen the fact that escrows or even deferred payments have severe restrictions that prevent them from actually being actioned out in large and complex M&A that actually exists. And the last part is with regard to the ease of operations and legal frameworks also. Enforcement of contracts, patents, et cetera. All of these were issues that entrepreneurs have actually cited. And all of these they may be issues for them, but these are the challenges that the IBCA actually took up. Because we realized that in order for investors to be part of this country, we need to make sure that the assets and the portfolios that we cultivate do actually have a strong and conducive ecosystem. In fact, if you were to look at, just in terms of the lack of rupee capital, if you look at the largest funding rounds that happened in 2022, 2023, there are only 3 Indian names who were actually part of that. The rest of them were all foreign names. And this is why our brightest minds and our brightest entrepreneurs chose to end up actually flipping overseas, just to end up actually being closer to capital. But we're actually now in the realm of a new Indian investing ecosystem as well. Like I said, these are all challenges that we took up, and some of them were solved, some of them were actually in the process of solving for that matter. It is actually India's moment in the sun. We have seen over the last few years that in terms of the ease of doing business, we have actually made tremendous strides and actually improved our ranking. And this has been validated by the fact that foreign direct investment into India has been on a considerable, consistent upward trajectory over the last 8 to 10 years. Even in terms of the peak investor confidence, there are large luminaries like Chris Capital, Kedara, and multiples who've actually managed to raise billion-dollar funds. All of them are also very happily members of IVCA as well, a strong validation of what we do. And even larger asset allocators and managers from the world, from Henry Kravis, from Temasek, from TPG, and everyone's actually bullish about India being the next engine of growth. And alternatives play a very, very strong role in this entire creation. We have close to $400 billion of alternate capital investment over the last 10 years. And even though we're going through a funding winter that's there as of now, the H1 2024 numbers end up actually paling what we've actually seen in the past couple of years itself. We are seeing that uptake end up actually happening, and investor confidence started building. And everyone looks at VC and startups and said, how do you contribute to the nation? Every $1 million of funding has a leverage of 5.8x when it comes to revenue, and ends up actually creating 47 direct jobs. These startups end up actually creating new age economic development, as well as jobs, as well as the economic engine that the country needs. And if you look at the budget as well, for that matter, in terms of some of the key reforms, the fact that we finally, when we used to go to the government and the tax department and ask them for parity, they used to say that parity is charity. They used to end up actually laughing at us when we asked that. But we finally had a system now where this artificially Ramos tax system has actually been rationalized. We are finally treated on par with listed investors when it comes to that. And that is in no small means one of the reasons why we're seeing a larger amount of capital end up actually flowing here. Even the angel tax, which is one of the most obtuse system of taxation where we tax capital investments as revenue receipts, a patently absurd way to tackle black money, has finally been killed. After 12 long years, after numerous battles, numerous flights to Delhi, numerous arguments with them, we've finally seen that go. We've finally seen the government realize the potential of this ecosystem, thanks to everyone who's actually part of this room. And we need to end up actually building upon that and going up well. In fact, we now have the opportunity to actually end up rewriting the tax code, to end up actually proposing change. In fact, the IVCA has created a committee as of now to rewrite the tax code, not just for alternative investment funds, but for startups as well, to ensure that we have a system that is clear, a system that is entrepreneur-friendly, and a system that is as good as what Karnataka has actually created to incubate these kind of startups and to create that entire virtuous flywheel. So with that, I just want to thank you very much. Thank you, everyone, for actually hearing me out. And we'll have a fantastic panel that actually goes into detail about all these particular changes as well and how we can create a framework to help all our startups actually come back and make Bharat Vapsi a true success. So thank you very much.
Thanks, Sid, for that very comprehensive address. I think we have lots to mull upon. May I call on stage next Mr. K.T. Chandy, partner and co-leader, EY Private Tax, EY India. He will be giving us a presentation.
Hi, good afternoon, everyone, and thank you. After Sid's, I heard Prashant say that we don't need the rest of our sessions. My good friend Reba is here and we'll talk about it, but I've been given 10 minutes to talk about the tax issues on, or rather, what is inversion, reverse flip, which takes us sometimes 3 months to button down. But having said that, if we could put it on the slides, I'll just start off by why did companies and why is it reverse flip? Because a lot of Indian companies and a lot of companies we worked on 10, 12 years back to take them out. They wanted to go out because the sense was there's an appreciation of business models overseas. The legal tax framework was easier. Their peers are outside. So that was a big point, that we have peers in the overseas market which will help us get valuation, so on and so forth. That still remains. There are companies who are still, if you may, externalizing, companies who are possibly deep tech, biotech, where they still feel that the larger money, the larger transaction may be overseas. But having said that, today, a lot of the main reasons of why companies went out are no longer as valid as they used to be. One of the points was, will a $100 million check come into the Indian system? Will they pay money into India? Now, all that has gone away. Will valuations, my valuation expectation be met? That has gone away. The valuations is as good as it is anywhere else. And is there a final exit from India? So that again is now patently visible from all our IPOs. The next point is, where is the business? See, this is the other thing. A lot of companies who externalize for reasons such as raising capital still had their entire business in India, focused in India. So now when you come back, there is a more natural alignment of business with the market that you're addressing. Now, companies whose markets are predominantly outside are still debating, are still thinking about externalization, so on and so forth. So, what is a reverse flip really? What do we mean by a reverse flip or an inversion? And today, one can ask the question on why should this only be applicable for Indian companies? Can't it be for any company in the world, who has a topical business, who has India as a market, who's using India for its talent, for its market, so on and so forth? Why can't those companies also come back? And that's a discussion for another day. But what does inversion really mean? You have a cap table overseas. It's organized either in US, Singapore, Mauritius, Cayman. These were the four most commonly adopted jurisdictions. Everything happened at that cap table. The center of gravity was outside. You had Indian operations organized in a sub in India. Businesses were undertaken in India, very little substance outside for businesses which were predominantly Indian. So now inversion means getting that cap table back to India. So you have an Indian company that houses all the shareholders. That may be the entity that undertakes business. And for global operations, if any, one has to turn around and put up a subsidiary overseas. Now, how do you do this? And you must imagine that there is value in the overseas entity. To externalize, we have created, IP ownership overseas. We have created some businesses overseas. And finally, that's the owner of all this, billion-dollar valuation, so on and so forth. So from a tax perspective, one must think about when you're lifting from overseas and moving it to India, what is the tax cost in those overseas jurisdictions? So the overseas jurisdictions will say, hey, listen, there is this billion-dollar company. You are lifting it and shifting it to India. You're taking value away from me. Why don't you pay me the tax for doing this? So that is question number one on how would you lift and shift these companies from overseas to India? India has a good regime where if you were to merge a foreign company into India through an NCLT process, it's a tax-neutral merger. Some countries permit outbound mergers. So Singapore, of late, using your interpretation of law, etc., companies have started getting approvals to merge into India. US always permitted it. Cayman always permitted it, Mauritius always permits it. So you can inverse into India. But what is the tax cost that one has to think about? So starting off with what is the tax cost, right? The tax cost there, US has an exit tax, it's 20% on value. There's a lot of planning that goes around it, complex planning. There are companies you will read in the paper, you would have read in the papers, have paid close to $250 million of tax in, inversing from US. There's a large Singapore company that you would have all heard about who paid, as Sid referenced, $1 billion in tax here. This was before, Singapore permitted outbound mergers. So there is that tax cost. That's point number one. Point number two are for companies who are still on the edge, right? Should I invert? Should I not invert? And what is driving all of this? What's driving all of this is there's an IPO market that is hot in India. I want to reach the IPO market. I want to give exits. I want more infusion of capital. I want to be a public company, so on and so forth. But companies who are far away from an IPO, who are only at a 50 million valuation, we are hearing of all the billion-dollar companies, multi-billion-dollar companies coming in. But the smaller companies are also debating, should I come in, should I not come in? And there, the questions they ask are different from the questions that an IPO-bound company will ask. The question they will ask is, how do I reverse this if I ever have to? What happens after 5 years? Do I have to do something? Can I go out? Point number two, where is my business? If it's all India, they're pulling the plug and saying, let's go back to India. Is my fintech solution, is my molecule that I'm developing more amenable for a transaction overseas, so on and so forth. So there is a lot of conversation on this is an irreversible move, point number one. Point number two, where a lot of people are worried about is what are the tax structures I adopted to exit from India in the first place? So one must remember reverse flip means we flipped in the first place. So for those companies, what are the structures we adopted? How have Indians held shares there? How have Other shareholders have held shares. Is there anything under FEMA that one has to worry about? So this takes a lot of time, lot of planning, lot of checking, because if you need to go for an IPO, all of this will be, this will all be an open book. It will have to disclose all of this. The next point is on this whole press note 3. As you know, any capital infusion by companies which share, by countries, by residents of countries that share a boundary with India, land boundary with India, require prior government approval. China does share, land boundary with India, and there is Chinese investment in a lot of the larger companies. So when you come back to India and issue fresh shares, how do you do it? What is the structure? Can you keep them separate? Can you develop, an instrument that can get them the economic return? And if you develop that instrument, is it against what Press Note 3 requires you to do? So the whole Press Note 3, point is large. The next is about if you are a SaaS company, in particular, what is the regulatory framework? Will I get the same, protective rights that I would if I have registered overseas? Now that's a debate that we can constantly have, and that's the reason why some SaaS companies are not as fast as some consumer-facing fintech, FMCG, call it what you may, would work largely in India. So I would say, as one looks at a flip, the first point, and the question 10 years back that we asked a lot of companies, or a lot of companies were posed by their shareholders, is why should we not flip? Given the higher valuation, given the ease of exit, given the ease of operations, why should we not flip? Now the question is also inverse, why should you not flip? So a lot of companies are sitting down and thinking through, in which sector am I in? Is this sector, in this sector, where's my market going to be? Am I going to be 80% overseas, 20% India? At some point, will I need to create headquarters overseas? So, these are questions that come up. If I'm in deep science, what is my exit going to be? If I'm, my customer base is entirely Indian, I'm an edtech company, why am I outside? So this question needs to be answered on why India, and proximity to an IPO or speed to get an IPO is sometimes propelling companies to, take that plunge. So you would see larger companies do it, force their way through it, even if they have to pay a bunch of tax, because of the IPO around the corner. But having said that, one has to think of why not India? What is the tax cost that I have to bear on my original flip? Is there any T that was not crossed that may come back to haunt me? Where is my, what is my exit strategy? And exit strategy is, I think, driving a lot of this. How do I manage Press Note 3? How do I manage some investors who don't want to come here? Will my next round of funding be easier if I'm here or overseas? I think funding questions India has dispelled once and for all, as in there's enough and more money, overseas money, Indian money. That's not a challenge. So with this, broad discussion, and as I was saying, we spent, it's a good 3 months that one would take to cross all the T's for inversion. There's a process overseas, there's a process in India. If you go down the merger route in India, it will take at least 12 months to get through. If you have debt overseas, if companies have raised debt overseas, India doesn't like to take on this debt. So there are stipulations on repayment of the debt. You may have to already repay the debt before you come in. So there are a lot of small things that come about. What about ESOP schemes that have already been issued and given to non-employees? How do you now bring it into India? What is the tax cost for the people? How do you do ESOPs for promoters? You can do it much easier outside. It's a little tougher in India, so on and so forth. So with that, let me round this off. I was given 10 minutes. I'm trying to stick to my time. And there are more eminent people following me, so I'll leave it to them. Thank you.
May I request Rajat to please hand over token of appreciation to Mr. Chandy. Come up. Come back up.
Thought we'll do it on the side.
Yeah, absolutely. On stage, and Sandy, thank you very much. Our understanding of the subject is too good, and we know PN3 has to be done. And ESOPs, and many more on the list. Thank you so much.
Thank you so much. Sid, may I please request you to also kindly come back?
That was too quick.
All right, great. Next up, we have our fireside chat. May I